Something just happened in the crypto world that most people never believed they would live to see. After years of courtroom battles, regulatory attacks, delistings, media hit pieces, and non-stop debate about whether XRP even had a future, a major Wall Street giant has made the boldest move yet. Franklin Templeton has officially launched the first XRP ETF. Not a rumor, not a headline for clicks, a real, regulated, institution-branded, exchange-traded fund, fully backed by XRP. The launch has already sent shockwaves through the market. Traders are scrambling, analysts are stunned. The SEC's position just took a major blow, and institutions are moving in ways that no one predicted. Today, you're going to understand exactly what just happened, what this means for XRP long-term, how the market reacted, and why this single ETF launch may become one of the defining moments of the next crypto cycle. Let's dive in. How the XRP ETF quietly got approved. What surprised the market most wasn't the ETF itself, it was how quietly the approval moved. Franklin Templeton filed early drafts months ago, but almost no one paid attention. Analysts assumed it was exploratory. The SEC didn't comment. Ripple stayed silent. Even crypto Twitter shrugged it off as another long-shot attempt. But in the background, everything was changing. New crypto-focused bills were moving through Congress. Political pressure on the SEC was building. The Bitcoin ETF had already normalized the idea that crypto belongs in regulated markets. Ethereum ETFs followed, and suddenly the idea of an XRP ETF didn't seem impossible, it felt inevitable. Then the green light came. No dramatic press releases, no loud announcement, just a filing update, trading approval, and confirmation. And just like that, XRP was upgraded from a controversial asset to a Wall Street-supported commodity. But the real surprise came the moment the ETF actually began trading. Day one, the market goes wild. The first 24 hours of the ETF launch were explosive. The moment trading opened, XRP's market behavior flipped upside down. Price volatility spiked instantly. Whales who had been positioning for months finally made their move. Retail traders rushed in late. Market makers tightened spreads, and XRP's global volumes surged. But here's the interesting part. Even with the price swings, XRP didn't collapse like many predicted. It didn't bleed, it didn't panic. Instead, the market showed something far more important: confidence. XRP behaved like an asset that belonged in institutional portfolios. This wasn't a typical sell-the-news event. Sure, some whales took profits, but they were replaced just as quickly by new demand. Analysts compared the opening liquidity to the early hours of the Bitcoin ETF, and while it wasn't identical, the sentiment was the same. Wall Street is validating this asset. But Inflows told an even bigger story. Inflows, outflows, and Wall Street's response. Most people expected lukewarm inflows. XRP has always been polarizing. Critics believed institutions would avoid it. They were wrong. Franklin Templeton reported stronger than expected day one inflows, and that changed everything. Wealth managers, private investment offices, and even retirement accounts began allocating small positions. Not massive, but steady, controlled, conservative. Exactly the type of inflows that grow over time. This wasn't speculation, it was allocation. And the message was clear. Institutions are no longer afraid of XRP. In fact, the launch created a domino effect across the industry. Analysts immediately started asking, will BlackRock launch an XRP ETF next? Will Fidelity follow? Will ARK try to get ahead of the competition? Will staking or yield-based XRP products appear next? For the first time in years, XRP wasn't being analyzed as a lawsuit asset. It was being discussed as infrastructure. But while Wall Street was positioning itself, something massive was happening on-chain.
On-chain shifts, whales, exchanges, and hidden moves. Just hours after the ETF launched, XRP ledger activity exploded. Thousands of large transfers appeared. Whales began moving XRP from exchanges into cold storage. Long-term holders accumulated aggressively. Market makers repositioned their supply. Network liquidity strengthened. What stunned analysts was a sudden drop in exchange reserves. When reserves fall sharply, it usually means buyers are accumulating. Holders are storing long-term. Liquidity supply tightens, selling pressure decreases. This combination is extremely bullish. Even more surprising, several large wallets that had been inactive for months suddenly reactivated, all within the launch window. The timing was too perfect, too coordinated, too synchronized. Someone knew this launch was coming, but the biggest shock wasn't on the blockchain, it was in Washington. The SEC just lost its strongest argument. The launch of an XRP ETF delivered a silent but devastating blow to the SEC's long-standing position. For years, the agency fought to label XRP a security. They lost the core of that battle in court, but continued to drag out the fight through appeals, comments, and mixed messaging. Then, Franklin Templeton launched the ETF. And that was the moment the SEC's argument collapsed. If XRP were still considered a security, this ETF could not exist. It couldn't trade, it couldn't be approved, it couldn't move through regulated structures. Legal analysts across the industry called the ETF launch the SEC's biggest self-inflicted defeat. Not only does the ETF signal acceptance, it signals concession. Crypto-focused lawmakers immediately reacted. This proves XRP is not a security. This proves Ripple was targeted unfairly. This proves the industry needs clearer regulation. The ETF launch didn't just validate XRP, it shattered the idea that XRP was legally risky. And that's where I pause for just 1 second to tell you. If you want to keep understanding crypto events the moment they happen, not days after, subscribe to Alt Club right now. Because the global reaction to this ETF is where the story gets bigger.
International markets wake up. The XRP ETF didn't only shake the US market, it sent a message across the world. Japan, already one of XRP's strongest markets, saw a sudden surge of retail and institutional trading. Local exchanges reported spikes in activity as the news broke during Asia hours. United Arab Emirates, banks using Ripple's technology responded publicly, calling the ETF launch a historic validation of the asset they already trust for payments. Singapore, institutional money managers in Singapore began pushing clients toward XRP exposure, calling it the first compliant global payments token. Europe, ETF analysts in Germany and Switzerland began drafting notes to regulators predicting that European XRP ETPs would expand quickly. For the first time, XRP wasn't being treated as a US legal problem, it was being treated as a global financial instrument. And that set the stage for the most important part of this story. What this means for XRP long-term. The launch of the XRP ETF is more than a market event. It's a structural shift, one that affects the asset's long-term trajectory. 1. Institutional legitimacy. XRP is now officially an investable asset for conservative portfolios. This changes everything from liquidity to volatility to long-term adoption. 2. Corporate treasury adoption. Companies can now hold XRP exposure without touching wallets, private keys, or exchanges. This opens the door for banks, fintechs, and payment firms. 3. Global payments infrastructure. Ripple's narrative finally aligns with real-world financial networks. 4. Cross-border settlement becomes more relevant. Banks using ODL now have a deep regulated liquidity pool in the ETF. 5. Narrative upgrade. XRP is no longer the lawsuit coin. It's now a global payments asset, a regulated commodity, a Wall Street-supported product, a long-term institutional allocation. This is the moment XRP enters its next evolution from controversial token to global financial rails. But with all this excitement, everyone wants to know the same thing.
What happens next? The launch of the XRP ETF raises more questions than answers. Will other ETFs follow? If inflows remain strong, expect filings from BlackRock, Fidelity, ARK Invest, and VanEck. All of them want a slice of the crypto ETF market. Will a staking or yield-based XRP product appear? Institutions are obsessed with yield. Staking ETFs exploded for Solana. XRP could see similar hybrid products. Will this start a new narrative cycle for XRP? Possibly the biggest one since 2017. Could XRP finally decouple from Bitcoin? With institutional demand, yes. For the first time, XRP has its own supply-demand structure outside crypto exchanges. What risks remain? Mainly macro volatility and potential regulatory shifts. But the ETF launch significantly reduces existential risk. Whatever comes next, one thing is clear. XRP has entered a new chapter, and this chapter is institutionally backed. XRP just made history. Franklin Templeton's XRP ETF launch isn't just another crypto event. It's a milestone, a turning point, a moment that fundamentally changes the future of XRP and the structure of the crypto market. For the first time, XRP has a regulated investment product. Institutional capital can flow into the asset safely. Global markets are reacting at scale. The SEC's narrative is losing power. XRP's long-term storyline is stronger than ever. XRP is stepping into a role it was built for over a decade ago, the backbone of global liquidity and institutional finance. And this ETF launch is the beginning of that transformation. If you want to stay ahead of every ETF approval, every major crypto shift, and every move institutions make next, subscribe to Alts Club, because the next phase of this cycle is going to be wild.